With the cost of car insurance going up and up and up, how do we get the best price and the cheapest cost for the best company that we can go with? We're going to go over the 12 different ways that you can save on your car insurance that are not just tactical. These are actual things that you can do to your policy or moving your policy to the right place. The first one is the most obvious, is increase your deductible. If you have lower than a 500 or if you're at a 500 deductible, a lot of these rate increases are based on the cars. Some companies will show you where the increase was. What I'm seeing in some companies is the collision is causing the price of the insurance to be more expensive from one year to the next. Raising that deductible can lower that back down. Yeah, it's your loss out of pocket. So if you went from a $500 to $1,000 deductible, now you have to pay $1,000 out of pocket first before your car's fixed. It's the risk reward that you have to decide in that case whether it's worth it for you. Number two is to check your credit. Now, I've got a video, I'll try to link it at the end or just search it up on here. With insurance, your credit is a major factor in a lot of cases. Now, technically, and you may ask like, hey, Mark, how is that legal? That's ridiculous. They shouldn't base it off credit. It doesn't make me a better or worse driver. But it's not exactly credit. So it's an insurance score. It's made up of multiple things, but I'll be honest with you, most of it is credit based. A lot of it leans heavily on your ability to pay or to keep up on the bills. One of the reasons, if you're curious, is because in most cases, the first thing you're going to stop paying is your car insurance. The ability to pay or the willingness to pay if something goes wrong or something tightens up, it's just, I'm just not going to pay my insurance. Probably most of the job of an insurance agent, or at least a service rep, is billing. I would say 75% is not changing red car to blue car, asking questions, increasing coverages, things like that. It's more just, hey, my bill wasn't paid, or hey, there's a late fee, why do I have to pay this? All of the things that come with that lower insurance score, I get it. It doesn't make you a bad person. It's just that the finances aren't mixing with the right company. So how do you fix that? That's number three, is you look at other options. You start shopping around, knowing that your credit may be bad. There are companies that are good with bad credit. There are companies that are good with good drivers. There are companies that are good with tickets. So depending on what your scenario is, if you're a good driver, you're likely going to have a lot of companies be more competitive, but you're going to find that you're going to have more options if you start looking at different companies. The best way and the easiest way is to work with an independent agent who can shop multiple companies. That way you only have to make one phone call or fill out one quote, and then they can start looking around at different options for you. Now, there are different versions of independent agents. We'll go into that in a different video, but if you are looking for new insurance, I'll put a link in the description below where you can work with a local independent agent that should be able to shop and at least show you your options available. This is going to be a retake, but it was weird. I said the fourth. So the fourth one is to think of doing a pay per mile. If you drive low mileage and you know that you can prove it, because they're going to install a tracker or they're going to put an app on your phone that tracks the mileage that you drive, or they're going to want to see the odometer before and after every certain renewal. You can show that if I drive less than 8,000 miles a year, most commonly the best deal is less than 5,000 miles a year, you can pay a lower cost for the insurance. The way that that works is you pay a lower base fee, but you pay for miles that you go over. So if you do drive 8,000 miles that year, that's fine, you're allowed to, but you're going to pay a premium for those extra miles. Just like if you leased a vehicle, if you go over the 12,000 miles that you lease it for, you're going to pay per mile in addition. It's not ridiculously expensive, but if you are driving more miles, it doesn't make sense to save money to try to do the low mileage program. 5 is to verify that your vehicle has all of the safety features. When you plug in a VIN, the vehicle identification number, into an insurance quote, when an agent does that or you do it online, it pulls all of the safety features that it knows of. The things that it doesn't know is what type of security you have. Is it passive? Is it active? Which means, does it just go off if someone tries to open the door? Does it automatically arm itself? Is it a recovery system where if someone stole it, you could track it? There are different levels of security and safety features that VIN doesn't provide. Most people that do quotes, if you're doing it yourself, just click the first button they see and move to the next step. make sure that you have the right discounts that apply specifically to your featured vehicle, that you have the right coverage. Look at the description. If your car doesn't have a turbo, but it says you have a turbo, then you may want to make sure you have one of the numbers right on the VIN. It could be that you mixed up a 5 with a S and you just didn't realize it. It does happen. And so if you have the wrong model pull up, sometimes having those extra features on a car causes the insurance to be more expensive. Number 6 is kind of breaking apart. It's bundle your home and your auto, bundle your renters in your auto, bundle your motorcycle in your auto. There are companies that are really competitive with this. The only thing that I've said is falling apart is because, in my experience, if it's a price thing, most of the time the ones that bundle are the best to go overall because they usually offer more coverage. They want to keep it all together. The reason they do that is because they know if you put your home, your auto, your life insurance, your umbrella, your everything into one package, you're going to stay at least 3 years longer, if not more. One, because it's a pain in the butt to shop all that stuff again. And two, is if you trust the company or the agent, then that's a good benefit. If you break them apart, they tend to be 20 to 30% more expensive on their own. Because all of the rates have been going up so much, I've been noticing that there are companies that are less expensive if I do break them up. X company that had a great bundling deal may have gone up 30% on the home, but company B was already 10% cheaper. So that 40% difference between the two prices can play a large factor. Now there are other companies, let's use Progressive for example, that do great with bundling the other things. You can do motorcycles, you can do cars, you can do boats and RVs, and they give you a bundle discount without having to put your home with it. Yes, it does usually make sense to put the home somewhere or with it, and sometimes even the agent that you're working with can give you a discount if you're just in their agency. Some companies allow them to at least give a partial bundle discount, even if they put your home and your auto with 2 different companies. Number 7 is keep a clean driving record. I can't tell you how much this saves you. I call tickets free money. Yes, the risk is higher so if you have a ticket, they know in general, the insurance company knows that the odds of you having an accident is X amount % higher, right? That's just common sense. But in my opinion, I've seen people get 3 tickets and never have a claim, which doesn't cost the insurance company anything. But you're paying 20 to 30% more because of the driving record that you have. I unfortunately see a lot of claims that are lower, they're right at the deductible. And when you do that, that can cause your insurance to increase. So paying out on the low claims doesn't make sense either. That's that history that you have as far as your claims and your driving history. Talk with your agent to get some advice on that. There is some pieces that you should be focused on, whether or not you should file a claim. Number 8 is to seek out other discounts. Here's where I say work with your current agent before you start looking at other agents. If it's a discount thing, sometimes your agent missed it. Sometimes there's other discounts that you know or you can add that the agent doesn't know. I'll link a video at the end that goes over specific discounts that might be beneficial. If that's not the case, you may just have lost trust with that agent or they're just not willing to take the time to work with you. That's when shopping with multiple agents or an independent agent does make sense to check around because they'll also give you some advice on some discounts as well. Again, the link's in the description below if you are shopping for car insurance. Number 8 or 9 or 12 or whatever we're on is take a defensive driving course. Not all states offer this. Check with your agent or check with your insurance company and find out if you take a defensive driving course, will they give you an additional discount? You also should be able to check how much of a discount because not all of the states give you a great deal for that. So check with the company. I've heard that you can get $50 a month off. I've heard also that it's only $3 a month. I've seen it. So it's both ways. It could be either which way. In that scenario, I would check with the agent to find out if it is. The reason I say that is because taking a defensive driving course can be fun if you want to kind of learn the road, but most of the time it's online. It's a little video, you watch the car drive around and it says, here's the intersection, should you turn left or right? Who has the right of way? The guy on the right or the guy on the left or the guy driving through the intersection? So you get to have a little bit, a few hour course, and that may give you a huge discount depending on the state and the company that you're with. The final way to get that extra savings on your car insurance is to review specific coverages. Take a full review. Most companies, even on our website, you can go on and if you're with us, at least with my agency, you can request a review and we'll go over all of the things, what's changed. Is this your house? Is this the way it's built? Is this the construction? If it's a home, your auto, how many drivers are there? How many miles are you driving? We'll just review that policy, and we may even resubmit to have the same company you're with to double check. Sometimes your credit got better, your insurance score got better, and your claims fell off. Revamping that or re-reviewing that can get you a little bit better of a deal, if not a really good deal, depending on the history that you've had with that company. Let me know what your thoughts are, if I'm missing something that you were able to save money on your insurance, or if there's something that cost you more by doing so. Like I said, the discount video is going to go a lot further in depth. Otherwise, this might be a great video for you to check out next. I'm Mark with Think Insurance. I'll see you in the next one.